Good afternoon, guys. It's Fearing. In this video, I'm going to tell you guys exactly how to determine my daily bias and narrative utilizing market maker models and Power 3. So in this video, I'm going to give you guys the framework to not only developing your narrative and bias the same way I do by utilizing market maker models and Power 3, but a very successful model that you guys can use within the second stage distribution so you can stop missing entries. So to sum everything up, I'll go into details regarding market maker models and Power 3. And the biggest thing you guys need to understand is when it comes to those two, think of market maker models as price and think of Power 3 as time. So the way I go about developing my higher time frame narrative and bias is simply by understanding where price is relative to the higher time frame, and I do so by identifying what stage of whatever higher time frame market maker model we're in, followed by understanding where price is relative to the weekly Power 3. So before anything else, before we get into that, we're going to have to understand what market maker models are. Market maker models is a program that runs within the algorithm to engineer liquidity, and by understanding what stage of our hard time for market maker models we are in is a crucial step as to how we're going to develop understanding our narrative and bias for each day and week. So market maker models can be split in between a market maker buy model and a market maker sell model. Something to keep in mind is that even when price is in a higher time frame market maker buy model, we can still see lower time frame market maker sell models. So think of it in terms of this. If we are within a higher time frame market maker buy model, and let's just think that this is a daily market maker buy model, each first stage reaccumulation and second stage reaccumulation can be represented as a lower time frame market maker sell model. So if we just fractalize this, we can see that happen within the first stage reaccumulation. So that's how it works. So each model starts with a original consolidation, original accumulation, as we can see here, where every single model is going to start with the original consolidation, and that is how it all starts. From there, we enter the first stage reaccumulation, followed by the second stage reaccumulation, which ultimately leads us to our smart money reversal, where price reaches our external drawn liquidity and where the buy program begins. From there, price displaces up, initiating the first stage redistribution, followed by the second stage redistribution, which ultimately leads us to our completed buy program. And of course, we don't just stop at the original consolidation in an overall bullish market. We're going to anticipate the market maker buy model to continue and price to continue seeking buy side. So biggest thing to keep in mind with market maker models is that it is fractal. It is running on every single time frame. So if market maker models are happening on every time frame, then like I talked about earlier, each stage of a market maker model can be represented as a Power 3. So like I was talking about earlier, with each lower time frame, within the overall market maker buy model on the higher time frame, each stage reaccumulation can be represented as a lower time frame market maker sell model. The way I look at it is that each stage of our market maker models, so our first stage redistribution, second stage redistribution, can be represented as a weekly Power 3, something like we have here. So the reference I'm going to use is the current market and our current daily market maker buy model that is still in development as we speak, as I make this video. As we can see, we have our original consolidation back at all-time highs between December and January, December 2024, January 2025, where the original consolidation started. Following that, we have our first stage reaccumulation, followed by our smart money reversal after price sought out the overall EQ of the higher time frame range that price was within. If you zoom out on the monthly time frame, it's very obvious if you go to that. From there, we displace higher, we get our first stage redistribution, followed by our second stage redistribution, which ultimately leads us to where price is now. And we're going to study the last week's price action, the last week's weekly Power 3, where we're going to study that. Anyways, as you can see, with the current market, we can see that price here can be represented as a weekly Power 3. So the second stage redistribution was a weekly Power 3 as well. But what we're going to do is study how we can analyze when price expands above that. So going into last week, we can see that price expanded above the second stage distribution. So ultimately, we just have a bullish, we're going to overall prioritize longs, and we're just going to have a bullish bias going into that week. So again, comes to narrative and bias, market maker model to develop a bullish bias. And now we're going to utilize weekly power 3. So price going into this Sunday open for weekly power 3, we are already expanding above the second stage distribution. So we're bullish biased, we're looking for longs. Now we're going to drop down to a lower time frame and study the weekly power 3 development, as we can see here. So now that we understand the importance of recognizing what market maker model stage that we're in, it is now time to understand how to actually trade that, because of course it's great and all to understand that we're overall bullish on the daily time frame. We're within, we have ultimate draw liquidity at the original consolidation high, and it's great to recognize that. But how do we actually trade that? Because majority of you guys are be taking trades based off of the 1 minute time frame, 5 minute time frame, 15 minute time frame. So just having an overall bullish bias on the daily time frame doesn't help us a ton. So now we're going to understand how to utilize power 3 to trade. So like we talked about earlier, each stage of accumulation distribution can be represented as a power 3. If we're within a daily market maker model, then each stage of accumulation distribution can be represented as a weekly power 3. Above, like we just talked about, price is expanding above the second stage distribution right here, drawing towards the original consolidation high above here. So with a clear external draw higher, an overall bullish bias in terms of market structure, we're only going to be looking for longs going into this weekly power 3. And biggest thing that you guys need to keep in mind, and this is for all you newbie ICT traders, biggest thing ICT talks about is to stop wasting your time waiting for price to retrace the equilibrium on every single range. You don't need to always wait. When price is seeking out all-time high, we're trading above all-time high, we're seeking out all-time high, your highest probability conditions are not going to be when price has these super deep retracements into discount of the range. No, your highest probability conditions are going to be when price taps into a higher time frame PD ray, forms a lower time frame SMT, and immediately expands. You do not need to wait too long beneath the 50% mark of your range. You do not need to wait to short above your 50% of the range. If you do that, you're going to miss a lot of setups. When price is in a strong trend, we're overall very, very bullish. We're not going to be seeing strong retracements. We're not going to be seeing deep retracements, not in a strong trend. And if you are seeing deep retracements, it's likely that you're trading low probability conditions. So our focus going into this week is just to be playing continuation and not playing reversals. So this is our weekly power 3 development from last week. We're going to get into how to trade each aspect of it, each daily power 3, because of course that's how we fractalize it even more. We have a weekly power 3, but we're focused on each daily power 3 development our bias through there. So as we can see with last week, another big aspect that we want to talk about is how to not get faded, how to not get messed up with seeing a lack of manipulation at our opening price. So something to keep in mind when it comes to Devil's Mark. And for those who don't know Devil's Mark, it's simply a wickless candle. It's a wickless power 3. It's a lack of manipulation within a power 3. So as you can see here, because we know that a wick means manipulation within our open, high, low, close. We have our open, we have a low, putting in the manipulation, followed by our open, followed by our expansion, our high, and then our close. Wick is manipulation, and we can see that, of course, yes, there's a wick, but overall there's a lack of manipulation down. Keep in mind, Devil's Mark needs to fit narrative of price. Then and only then will it be high probability Devil's Mark. So as you can see above, based off of our higher time frame market maker buy model, having a bearish weekly Devil's Mark does not fit the narrative of price, because higher time frame is bullish. We have a clear external draw on liquidity higher, so that does not fit the narrative of price. We're not going to be looking for shorts down to there, and overall we can just disregard it. So now moving on to fractalizing your weekly power 3 into each individual daily power 3. how we're actually going to go about taking trades within each day, how we develop a bias going each day based off of our hard time frame market maker model, and how we're going to take trades based off of that. So based off of our hard time frame, our daily market maker buy model, we understand that a hard time frame narrative is bullish. And since we're expanding past the second stage distribution high, we're ultimately just looking for longs going into each day. And like the model we talked about, higher time frame P2A, lower time frame SMT, playing continuation. That is a model that we're focused on. Each day, like we said, we're going to be focused on longs, like the model I referred to earlier. We're paying attention to a higher time frame P2A, and within that higher time frame P2A, we're going to be focused on a lower time frame crack and correlation. So now we're getting into here. So that this is our weekly Power 3 development, but of course, we want to be focused on intraday price action and trading each day. So going into Monday, how we're going to trade this. So overall, going into 9:30, we'll say. So overall, going into 9:30, price has yet to engage with a higher time frame P2A. Let's go back to right before 9:30. As we can see, within 9:30, price is yet to engage with a higher time frame P2A. There's been no significant retracement. We have yet to want to enter a trade. So ultimately, going into 9:30, in order to take a high probability entry, we're going to have to see some sort of significant retracement in order to validate longs. No, I'm not talking about retracement all the way down to the new log, not a retracement into EQ the range, simply a retracement back into a higher time frame P2A, such as the 4-hour BISI. So now, as you can see, 9:30 opens, we manipulate down into that 4-hour BISI. From there, what we're going to do, based off the model that I talked about, is then look for a lower time frame SMT. So we'll just let price develop until we can ultimately get some sort of SMT, because as of now, sure, we have a crack and correlation right here, but that is not time-based. As you guys know, we focus on time-based SMT, and that is what makes SMT significant, because it's based off of time. However, I'll give you guys a hint at the type of SMT I look for, and this is not it. This crack and correlation here is irrelevant. So go forward a little bit more. We can see that at noon, we can see that YM runs out the AM session lows, while ES and NQ fail to. From there, now that we have engaged with a higher time frame P2A, as well formed a lower time frame crack and correlation by forming SMT with our AM session lows, we can now validate longs. So we have our SMT with the AM session lows as NQ and ES pulling a failure swing while YM takes out the low. We can then enter off the next 50-minute CISD, just as we talked about in our previous videos. Of course, CISDs don't just need to be a entry on the 1-minute time frame. It can also be on a higher time frame. When you're strictly trading based off of the daily Power 3, we tend to focus on 5-minute and 15-minute structure. For this type of SMT, the structure we're going to be focused on is the 15-minute. From there, we have a 15-minute CISD, stop loss at the low, TP at the only clear pool of liquidity, and from there, we're in. And as you can see, plays out quite aggressively, hitting TP right at end of day. So that is how we go about our daily Power 3. Now, this is just one example of a few more. Going into the next day, make sure I didn't miss anything when talking about that. Nope, it's higher time frame P2A, lower time frame crack and correlation, then the CISD as our entry. And from there, yeah. So now moving on to the next day. Applying the same logic. Now waiting for 9:30. So directly going into 9:30, which is actually where we're at right now, we can see that on the 4-hour time frame, price has not formed a new 4-hour BISI. We are delivering out of that 4-hour fair value gap, leaving behind a 4-hour order block. This 4-hour order block can act as our higher time frame P2A going into the following day. Keep in mind, there's so many more P2As than just fair value gaps. I see a lot of you guys so focused on simply fair value gaps, simply SIBIs and BISIs. There's so much more than that, and a lot more that you guys can utilize. Since price is delivering out this 4 BISI, stock closure above this down close candle. That then validates that as an order block. As we can see, going into New York Open, or prior to New York Open, we are developing a classic buy day where we see our Asian session open, directly manipulate down, leading us to London session where London then reverses. London, and of course, what validates this reversal? Well, one, we engage with a higher time frame PDRA, being that 4-hour order block. Specifically, I marked out the mean threshold of that order block, and within that, we then see that we form SMT at the lows once again. And this is very, very similar to the previous day. So going into this New York Open, we're ultimately going to be looking for longs, as we already had our higher time frame PDRA being engaged with. We already have our crack and correlation at the lows, and leading up directly into New York Open, we already are extremely, extremely bullish intraday. So directly going into New York Open, we're ultimately going to be looking for longs. At 8:30, I believe this was CPI, whereas we can see CPI significantly wicked lower as well as higher. And as we can see, directly going into New York Open at 9:30, 9:30 manipulates down, and we have a crack and correlation with the data low. As we can see right here, YM and ES both ran out the data low, while NQ failed to do so. Directly going into New York Open, we then form an additional crack and correlation. We're not there. No, yeah, right there. Additionally, form another crack and correlation with the 846 low, as ES fails to run it out, while NQ and YM both do so. From there, we can then validate longs. This time around, we don't need to wait for a 15-minute CISD, as structure is already bullish. We already are bullish, extremely bullish for that matter. So there's no reason to wait for another 15-minute CISD, because again, our 15-minute CISD had already taken place all the way back at 5:15. So at this point, we can already validate dropping down to 1 minute time frame and then turn off the next 1 minute CISD, just as we have here. As we can see here, a strong CISD. What makes it strong is due to the SMT that supports it, followed by the displacement. From there, we enter off there, stop loss at the low. TP, since there's no clear extra drawn liquidity, we can simply target a higher time frame PDRA or some sort of external draw. And when we zoom out, kind of mix through a few different time frames, we can see that the only reasonable draw would be this weekly CB. Of course, it looks like we tapped into that. We did, however, not this specific day where we're trading. So the only reasonable draw on liquidity going into this day would be the weekly CB, unless you have some sort of, personalized target goal. I don't know why I did that, but enter off the CISD, stop loss at the low, TP at your external drawn liquidity, just like that. And from there, we just simply let it run. We can manage our risk once price runs out for that matter, the only internal structure level of buy side, move stop loss break even there, and after that, just let it run. Potentially trim, since there's no other internal structure clear drawn liquidity, just trim for a personalized profit target, or once we're halfway there, to play it safe. But ultimately, when we are expanding past the second stage distribution, that is when price is moving the most aggressively. And when that happens, you want to be sure that you are actively catching the biggest moves that you can, because this is when those biggest moves happen, during the second stage distribution. So we're ultimately looking for a clear actual drawn liquidity each time, such as this time around. Of course, we'll go up a time frame, but we can ultimately see that your TP is hit within a reasonable time. You simply just take a trade from market open up until lunch. Very reasonable, and that's how you go about it. All right, so we covered 2 different in-depth examples on how we can utilize market maker models to develop a bias and narrative, as well as how to utilize Power 3 within that. We showed 2 examples within our Power 3s, or with Monday, Tuesday's daily Power 3, define longs. Now, I challenge you guys to go into Wednesday, Thursday, Friday's price action and identify how you can utilize the exact same model within your trading. As you know, we went from a higher time frame P3 into a lower time frame SMT. And a bit of a hint, Wednesday was overall just accumulation as there was no news. It was the day following CPI, the day prior to PPI. So ultimately, Wednesday did nothing. I want you guys to focus on Thursday's price action and Friday's price action. And I challenge you guys to go onto your charts, find what trades you could have taken following this exact model that I'm teaching here. And once you find your answer, once you find, the proper setups, feel free to post that to X, tag me in your post. I'll repost it myself. Also, feel free to join the Discord in the description below. It's free. Feel free to post in there. Ask, any questions you have. If you want any feedback on the trade setup that you did find, feel free to ask. Just tag me in the server and we can review that. Otherwise, this is the end of the video. If you guys have any other questions, again, feel free to join the video or join the Discord in my description. And feel free to ask in there or list them in the comments below. Otherwise, I'll see you guys all in the next video in about a week. Hopefully, we are able to do a trade recap sometime this week. So stay tuned for that. Until then, you guys have a great rest of your month.